Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio with Andy Baehr, Managing Director of CoinDesk Indices, to discuss the global digital assets landscape. We'll also talk about some new product that's being planned as well. Andy, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
And it seems to be that, it's getting a little bit more positive in this space right now, and the investment outlook is improving. We're seeing new investment products come on the scene.
Definitely. The mood of the market continues to improve, continues to strengthen. Just this morning, CoinDesk reported that the second highest inflows of Bitcoin exchange-traded products ever, over 25,000 Bitcoin, $750 million entered since mid-June. So it's really strong.
And it's a global story. It's not just happening in the U.S.
It's definitely a global story, even though we're starting to get signs of the regulatory environment loosening or avenues for success here. What's going on in Europe and Asia is simply stunning. A lot of regulatory support, but a lot of innovation, a lot of new products coming out. And we're delighted that our clients are participating in that.
From a macro perspective, is Bitcoin and some of the other coins decoupling from what we're seeing with inflation? How did it react to the CPI and PPI prints that we've gotten?
It was another supportive element with a weaker CPI and yields going down and a weaker dollar, right? Any dollar-denominated asset is going to be more expensive as the dollar gets weaker. But also as the market starts to think about the Fed taking less motions against inflation, Bitcoin will react better to that lower real yield number.
What about the ruling that we got on Ripple last week? I mean, that has to be positive for the space.
It's positive for the space. People love to see it. Certainly it was a mood enhancer for the business. But let's think particularly about altcoins, right? The other ones that were really under threat of being delisted from exchanges because they might get similar treatment. So this gives a way for those exchanges to keep support for those altcoins, and it allows U.S. investors on-ramps and off-ramps for trading those.
And despite inflows and the positive news that we've seen in the space, it seems to be that a lot of the trading's been range-bound.
It's been range-bound and of limited volume, right? After the first quarter's really stunning performance, volumes and volatility in Bitcoin have been lower. Bitcoin and Ether prices have been range-bound around 30,000 for Bitcoin and around 1,900 for Ether. The volatility of Bitcoin is down to around 30, which is stunningly low, right? And if there was a US Bitcoin VIX, let's say, that would probably land somewhere in the low 40s, right? And that's about half of what we'd expect to see maybe a year ago.
Let's talk about ETH staking. Give us a high-level overview of what that is. I keep hearing a lot about that.
ETH staking has become a really fantastic market to watch. It's really becoming a lot more like other financial markets that we watch. Ever since ETH changed from proof of work to proof of stake, and through the most recent upgrade became more liquid in terms of deposits and withdrawals, a number of validators have rushed in to help secure the network. So right now, there are 675,000 Ethereum validators, and there's a line of about another 80,000 lining up to get in, right? And so in dollar terms, that's about $41 billion of Ether that's staked right now. Still, that's only about 18% of the amount of Ether that's out there, so there's tons of room to grow.
So do you think that we'll start to see more product based off of this?
100%. So Ether staking yields break down into two pieces, right? You get rewarded just for helping to secure the network, and you also get to receive a portion of the fees that people pay to use the Ethereum network. This part we like to call the monetary policy of Ethereum. It basically goes up and down in ways that help secure the network even better. So as more validators come on and it becomes more decentralized, that rate goes on. The other half is all about demand. The more people that want to use Ethereum products, the higher that demand goes and the higher yield that those validators will receive.
Hasn't there been some negative connotation around staking and the types of yields that have been advertised?
You know, the best part about staking, and we're going to be launching a staking product that'll be a great benchmark for that. That'll be a great benchmark for staking products and also a settlement rate for derivative contracts. Tons of people want to trade and be benchmarked against that rate because it's very transparent. So the best way to get confidence about the rate is to really just look at Ethereum, look at the rates, everything's clear, and you can see exactly what's getting paid. A validator right now might make about 4.5%.
That seems more reasonable. It feels as if a year or two back we were seeing almost double-digit yields, and I think the more products that are out there and the more standardization that evolves, it will add to legitimacy and give some benchmarking to it.
100%. Benchmarks are important. It's important to realize that staking is not lending. Staking is not selling options. It's a yield based on an amount that's paid strictly, directly from, let's call it the central bank of Ethereum to help secure the network, and paid by people who are paying fees to use the network. So in that sense, if you're already in the Ethereum network, it's more close to a risk-free rate than to a risky yielding rate or a risky loan rate or a risky option selling rate.
All right, Andy, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.